Because human nature works the same way time after time, the Japanese rice traders provide us with some very simple analytical tools that show when investor sentiment is about to change. Obviously, the bearish evening star signal and a close below the T line started the downtrend in the Dow. We also could identify the bearish J hook pattern, the bounce off the 200, the bounce up to the T line and a failure, and wave 3 of this bearish J hook pattern. Wave 1 and wave 3 are now approximately the same. There's other pieces of evidence that occur in human nature the same way over and over, which is if you see a bearish engulfing signal in the oversold area, start watching for a reversal signal. Or if you can see that wave 1 and wave 3 are about the same magnitude, start watching for a reversal signal. And the further away you move from the T line, especially in the oversold area, the higher the probability you start watching for buy reversal signals. Knowing these things allows a candlestick investor to be prepared for the optimal time to start taking profits in short positions as well as buying long positions. Staying short in trades like NVIDIA, after you had the hanging man, the shooting star, and the close below the T line, and then no trading above the T line all the way down. Again, a wave 1, wave 2, wave 3. Now you see the extensive selling in the oversold condition, and look how far away you've started to move from the T line. This starts indicating that it's time to start watching for buy signals. The same scenario can be applied to Amazon. Amazon topped out up in this area. It's down 20% from where the recent high. And look how the hard selling has occurred. The distance away from the T line, the magnitude of the selling, and the fact that it did a bearish engulfing signal in the oversold area. Aggressive traders can be buying once they, if it trades lower, you merely flip to your 10-minute chart and watch to see what that chart does to tell you, because the alert is already in that you're that far away from the T line, the 10-minute chart will tell you when the selling has stopped and the buying has started. On the other hand, you don't need a relative strength indicator to show that things like Tesla, after a strong morning star signal gap up from a doji, tells you the uptrend remains in progress until you see a confirmed sell signal. But just the fact that Tesla is trading positive in market conditions that we've seen tells you there's additional factors there of human nature that doesn't allow or doesn't incorporate that the market in general is selling off hard. This is why the graphics of candlesticks is very beneficial to see what is actually happening in a price move in spite of what the overall market is doing. This is why recognizing which patterns, or even recognizing the patterns that tell you which stocks are acting better, as in our recommendation on core, we could see the fry pan bottom, we could see the cup and handle, and notice what it did today. The market was down big, and this was still trading positive with a little Morningstar best friend signal, creating your classic fry pan bottom J hook pattern. One of the strong indications of or results of a pattern is that it will still move in the pattern because the investor sentiment has been building up to create this pattern in spite of what the overall market is doing. And recognizing when a J hook pattern is setting up, as in our recommendation on PTI today. You had a bullish left-right combo. Today you have a doji. We know what the results should be. If it opens positive, the simple doji rule says it's going to trade positive. And if it trades positive, we know that the doji sandwich is going to create another candle about the same magnitude. telling you this J-hook pattern is in progress. So these simple if-then statements, or if you see A, B is likely to happen, allows the candlestick investor to take advantage of trades without having to have fear and their emotions involved in the trade. That'll be it. We'll see you in the chat rooms.